what is a consumer price index and how does it affect our economy? Yeah. So what governments do is they track how much it costs to buy stuff, okay, like staples, like bread, milk, and other important parts of our diet. And what they do is they track that into the CPI, which stands for the Consumer Price Index. And they track if prices go up or down for these products. Usually they go up. We know that over time the price of stuff is always more expensive. And the reason why they track it, and the reason why investors love looking at that, is because if the CPI index increases, meaning if the price of bread and other stuff goes up, if it goes up too much, if stuff becomes too expensive for people to buy, then what the government does is they raise interest rates. Okay, so the CPI is inflation. Okay, that basically means the price of stuff. If the CPI goes up too much, then what happens is investors freak out because they think this signals that the Federal Reserve chairperson in America or the Bank of whatever in other countries is going to raise interest rates in order to bring down the cost of stuff. How does that work? Well, if you raise interest rates a lot, then people are going to save more money, right? It makes sense. You're going to put more money in the bank because interest rates are higher. And you're going to spend less money on stuff. And if everybody spends less money on stuff and they save more, then what happens is the price of stuff goes down or doesn't go up as much. And so that's CPI, and that's why it's very, very important. And if you're interested in the aggregation and how to break that down in a lot more detail, let me know. We can do an exercise together, or you can go to bls.gov. To learn more about government statistics and what goes into these things. And usually what happens is governments release press releases, so to speak, kind of like companies do, to let you know what the CPI is or the unemployment is, every couple of Fridays, whatever, Friday morning before the market opens. And you can always search online and understand how those are calculated. Or you can take my complete financial analyst training and investing course, because at the beginning of that course, I teach you about macroeconomics from an investor perspective. We talk about the World Bank, the IMF, which is the International Monetary Fund, as well as many other agencies. We even go to U.S. government websites and we look at how CPI and other statistics are calculated.